Welcome to Multiple Perspectives. I'm David Lofgren. If you're a regular listener to the podcast, you'll probably notice that the timing and the format of this show has shifted a bit. For the past year or so, we've been bringing you a weekly quick hit of economic news, commercial real estate info, and highlights from the Equity Multiple platform. Starting today, we're going to shift towards a different type of show. An interview format that will bring you conversations with people like you. Every other week, I'll sit down with a different guest to learn about their approach to personal finance, wealth building, and investing for the lives that we're living right now and for the lives that we want to be living in the future. If you liked the quick hit weekend view format, fear not, we're still delivering that type of content in our weekly roundup newsletter. Just head on over to equitymultiple.com and sign up today. In the meantime, I think you'll like what we've got in store. I know I do. Today, I'm excited to have Dr. Christopher Liu on the show. Dr. Liu is a physician turned financial freedom expert who redefined his financial future by achieving financial independence at age 29. And today, he is here to share how passive income and alternative investments can empower self-directed investors to break free from traditional career paths. Chris, welcome to Multiple Perspectives.
Hey, David, thanks for having me. And I'm an avid fan of the show, and I'm really happy to offer value to the audience and really dive down into the questions. And I'm really excited.
Awesome. Well, we're excited to have you here. Your journey from practicing physician to achieving financial independence at such a young age is pretty extraordinary. I'd like to dive into some of that journey, but first I'm just wondering if there are any specific sort of principles or practices that enabled you to break away from your traditional career at such an early age.
Ultimately, from an early age, I understood the importance of money and wealth. And typically, some of those was really just kind of understanding how money works, how to grow it, how to save, how to invest it, how to protect it. And traditionally, how money was generated was through a job. And to me, it was always quality of life and freedom. So I always wanted to run my own shop, and I always wanted to control my own future, control my time, control my income, control where I lived, control who I worked with. And so those sort of mindsets really help set the stage for financial independence and financial freedom. So one thing that really helped me was always investing. So I've always been fascinated with how the ultra wealthy and how the ultra rich got to where they were. And one thing that they've always done is some of them started business, created businesses, but all of them invested in assets. So assets could be stocks, real estate, company, and they invested in themselves. That's been the greatest ROI. And some of them did that right off the bat, and some of them were lawyers, doctors, engineers, corporates that saved their money and invested it wisely. So that was kind of those types of mindsets where you have to take your earned income that you traded your time for money and put it into investing into assets that were growing and appreciating. So that's one of the key things that really helped set me apart from my cohorts and my colleagues.
Interesting. Yeah, I think so often, we hear of physicians going into their career recognizing that, okay, there's this lag, right? All of your peers who aren't going into the medical field are going to be earning right out of grad school or right out of their education. And you guys still have more work to do, more education to go through before you finally start earning. You face some really sort of unique challenges. Were there any techniques that you used or any sort of strategy that you applied to those early years during school, before school, or immediately after that allowed you to get sort of a jump start on being, financially independent?
Yeah, great question. Recently, I had a guest on my podcast, and we were just talking about our love for books. And for me, books were kind of a way to get into the mind of some of the top people, and just, for like $20, you could, get their insights, ideas. So one of those things was just being an avid reader, being voracious, hungry, just out there for knowledge, for information, just insights, wisdom, personal development, investing. So that was kind of the first thing that really set my mind. And two key books that really jump-started me ahead was Rich Dad Poor Dad, which I read back in 2002, right after 9/11 and right after the WorldCom Enron scandals. And these really set the stage, talking about globalization, talking about where the United States was heading, talking about China, talking about how kind of this idea of work hard, save, invest, get out of debt, these kind of old industrial age ideas, how they were crumbling in this faster, more novel information age. So Rich Dad Poor Dad. Second book that really got me started was Getting Started in Options. So really I started beginning my investing and trading career as a medical student, just in my spare time. I was less interested in just partying, and I was more interested in just building side income and businesses in my free time. So I started right at the start of the bull market from '02 to about '06, '07, just investing in stocks, trading options. These were really great times to be trading and investing. So that was those two key books were, and also the third book was Multiple Streams of Income, talking about how you need to diversify your income streams as opposed to relying on a single source of income source from a job. You had to have real estate investments, you had to have equity investments, you had to have businesses, royalties, these types of passive investments, dividends that brought you income whether you worked or not. So those three books really set the stage. Another key thing was I was very prudent about student loans. I did not get myself into student loan debts. A lot of my college years were funded with scholarships, full tuition scholarship. My medical school was funded through the MD PhD program. So I was making money as a medical student, and I really used that to really parlay my future. I started networking with entrepreneurs, people that inspired me, and people that I admired and emulated, getting their insights, getting their wisdom, implementing their strategies, and combine that helped me to get a head start. So in another podcast, I was talking about how as a medical student, I was starting ahead at almost $200,000 in liquid net worth, just kind of on the side. So that's the type of things that really set me ahead.
Wow. So you were even going into medical school already thinking, how am I going to diversify my revenue streams? How am I going to sort of create a life for myself outside of just a W-2 wage that I expect to get maybe in 5, 8, 10 years, depending on how long school took?
Yeah, I really took the long-term approach, and I thought to myself, in 50 years, where do I want to be? And, being a doctor is great. You get to see patients, you get to treat patients. But that wasn't really where I wanted to be in 50 years. So, when I was 70, I wanted to be running a company. I wanted to be the CEO. I wanted to be a founder. I wanted to be calling my own shots. I didn't want to have a boss. So medical school was great. It was a stepping stone. But ultimately, I started to see the crumblings of the medical system in 2002 because that was almost 18 years before COVID. And I knew at some point, because of bureaucracy, because of regulation, because of insurance, because of, our food, our drug, our medical device supplies, all these things, they were, it was a fast moving train headed on a collision course. So I was like, I need to start planning and preparing for my future, because when the shit hits the fan, I don't want to be around. I want to be I don't want to be in trouble like a lot of doctors got in 2020. So that was the stepping stone. But ultimately, medical school and being a doctor was a means to an end to freedom.
Wow. Yeah. Interesting. Now, I feel like a lot of people might think of this sort of bold mindset to, research trading options or to research sort of, I know, from listening to other interviews you've done, you talk about what a big role real estate played in some of your early sort of wealth building. Is there something, or was there a moment where you were able to sort of shift your mindset? Have you always been someone who's been able to just sort of take bold leaps or take these risks, willing to just say, well, maybe this won't work out, but I'll learn something? I mean, how did you decide in the midst of medical school to also take these other risks and pursue, these other potential revenue streams?
I think it boils down to entrepreneurship. And so I I liken it to, because my parents, they were first generation immigrants. They came here to the States in the 70s, and their dream for my brother and myself was to be physicians. They wanted us to be doctors because they didn't have that chance. And kind of doctors was kind of their version of the American dream. If their kids became doctors, they achieved the American dream. So, but I've always been an entrepreneur. And like I said, I wanted to own and control my time, my income, where I lived and who I worked with. And I wanted to control. I didn't want to have to, ask for vacation or, if I take a day off, these types of things. And so that sort of mindset really prepared me. And when I was a little kid, I was always taking small risks because I had to find my competitive edge as an outsider. So that the only way to find my competitive edge was through through excelling in school. But again, I also struggled in the early times because I didn't want to have a boss and I wanted to call my own shots. So that rubbed some people the wrong way. So I had to learn how to fit into the system and navigate the system until I was able to achieve this sort of freedom. So I was taking very small risks, calculated risks. If the risk didn't pay off, it was okay. It wasn't these kind of this huge, gigantic risk. And so that ultimately led to me just learning and seeing and planning for my future. And the way I de-risked it was I didn't tell people I was learning about options, or I was just doing it quietly on the side. So, obviously nobody knows about it. Then, if you fail, then it's okay. And if you're a success, you just stay quiet. So I was able to build on tops of these small risks and these small freedoms and these small success, and gradually it built up and up and up. So, these big, bold leaps. So the biggest leap I ever took was in 2008, just kind of when I saw the real estate crash, and that was my opportunity, and I took it and I jumped on it. But that was because I took so many smaller, calculated risks that led up to me having this confidence to, go be bolder.
Wow. Okay. So yeah, I mean, you've touched on a few of these things. Maybe you can break down for us, sort of your trajectory step by step from being in med school, exploring, some of these investing options through your early career as a physician investing in real estate. Just like for the listeners, help us understand, what was your path to this point where by, I think 29 is when you finally say, I feel like I'm truly financially independent.
Oh yeah. So, like I said, med school, I was learning, got my financial freedom. And, again, I took the traditional route. Because I talked to a lot of mentors in med school, and all of them, they were not entrepreneurs, but they told me, Chris, just go through residency, even though you hate it. Just get your board certification, get fellowship, and practice for a number of years. And if you don't like it, retire and do something else. And to me, that was like kind of the safe approach, but it didn't make sense because it just took too long. It was just so long, and it was just very inefficient. And so, quietly, I was developing these skill sets of understanding how money works. And there's a moment in time where it's like, when that's your opportunity, if you don't take it, the door shuts. And that was in 2008. I went into orthopedic surgery, and, that was my specialty of choice. But again, I saw my fellow colleagues and my attendings, they were very unhappy. They were divorced. Their kids hated them. And I was telling myself, I don't want this kind of life. I want abundance. I want happiness. I want, relationships and kids. And, I want to be financially independent as well. So when the real estate crisis hit in 2008, that was my chance. And I took a leap of faith, and I poured everything. I turned in my keys, badge, and pager, and I moved back to Houston, and I started investing in single family real estate. And to give you an example, because Houston Medical Center, I was here as a med student so I knew everything about all the hospitals, all the routes, everything. And for a 2-bed, 2-bath, 1,500 square feet, decent condo, which you could rent out for $1,500 back then. Today, you can rent it out for $2,100 approximately. And those units in 2008 were going for $50,000 to $60,000. Okay. And that was, today wow. They're going for 160, 170, some areas, 200, 300. So, I mean, it was no brainer. I was like, if I could singularly focus on acquiring rental real estate, I could get fun. I could build my net worth. And from 2008 to 2016, I had become a multimillionaire, and I was able to, I was, financially free. So that's kind of my story. And then after that, I took a year off, traveled the globe, got really bored very quickly. So I needed another purpose. I needed another passion. So a lot of doctors were coming to me asking, how did I get financially free? Asking me about investment advice, talking about real estate, equities. And so I started Financial Freedom for Physicians to empower doctors to take control of their financial futures, to live the lives of their dreams.
Fascinating. So when you're building your sort of small real estate portfolio, growing real estate portfolio, did you feel like you needed to do a bunch of research to understand sort of what the real estate investing world was all about, figure out how to do things like build comps or understand how to sort of create models that allowed you to feel confident in the properties that you were purchasing? Was there any sort of, did you position yourself as a certain type of buyer or a certain type of business person who would execute on sort of the same plan over and over again? Or was it truly just this, these assets are so wildly undervalued that it's hard to go wrong?
Oh, another great question. So part of it was, so I boil it down into three camps. First was the wild valuations, buying these properties, at huge discounts, sometimes 50 to 60% discounts. So that was one thing. So that was the timing. The second thing was I employed a cookie cutter approach. So as a med student, I had I had purchased my own condo for my own living, and I rented out the other room to my classmate, and I renovated that as well. So I was learning about rehab, renovate, and refinance and repeat. And then, so I had this knowledge of how to properly invest and, how to research and look at the comparable real estate properties and the values. So that was the other thing. And then the third thing was this cookie cutter approach where it was the same process. I just repeated the same process. So a lot of my colleagues, when they started their careers, they started not only doing single family, but they started doing multifamily or apartment or commercial or syndications. But I never did that. I just stuck to what I understood, which was just single family rental. Could I have gone into these bigger and bigger deals? Yes, but I would have risked more time and I would have risked more capital. So I made money from my investments and I didn't risk as much. So those were the three things that really helped me set me apart and set me ahead.
Were you worried at all going into single family in from what I understand is a single market, that you weren't sort of diversifying your investments in more ways? I mean, did it feel like a risk?
Another great question. So yes and no. So because I understood that market and I understood that asset class, it was less of a risk than looking at, for example, commercial or multifamily or apartments. So there's this great saying. What I really love is this idea with this investor mindset is always risk diversification and risk stratification. So you have a portion in equities, a portion in real estate, gold, silver, Bitcoin, things like that. But as an entrepreneur, what makes you successful is your singular focus. So it's really different. So as an entrepreneur, you have to really singularly focus on that one thing, that skill that you are the best at, and just hone that in. Because if I had been spread out across all these different things, I wouldn't have been as successful. So that's kind of the oxymoron between entrepreneurship and investing.
Right. Yeah, I mean, I'm curious if you feel like real estate was something that you just sort of accidentally got into, or whether it's it's such a tangible asset that it's something that was sort of right in front of you, or if there's something particular that drew you to real estate as an asset class.
Another great question. So I really got drawn to real estate in my early days. Now these days, I'm more interested in building and creating and starting business and buying businesses. But in my early days, I was drawn to real estate because all the wealthy people I talked to they had real estate as a component, and real estate as an asset class has always attracted those people with money, doctors, lawyers, and so that if I could do well, if I could understand that asset class, then I could be successful because that's where most of the money is going. The second thing is it's a hard asset. So, if I acquired this property and I was, on time with the payments and everything, that was my property. I owned and controlled it. So I could use it for office space. I could use it for living space. I could rent it out. I could just, buy, I could renovate it. I could do a lot of different things with it. There was a lot of tax advantages, depreciation. There's a lot of write-offs. So as an asset class, and then the other thing was that really drew me to real estate was the tenant was paying down the debt that you had borrowed. So you're borrowing 20%, and the bank lends you the additional 80%, and you can further improve on the property, and then the tenant is paying actually for those improvements. So you basically, after the end of like 15 to 30 years, depending on the mortgage, you have a asset that is paid for by someone else. So that's what really drew me to it, the business aspect. So, however, it's really hard now these days with grossly inflated real estate prices. So it's really hard to get in unless you have a lot of capital, or you just, there's severely undervalued properties, which there aren't as many these days. So that's why I also looked into equities and options, because there I could start a brokerage account. I could fund it with a couple $1,000s. There was also margin trading, which I don't recommend, but that's just kind of the way you can look into it and kind of get your feet in and start excelling and start learning. So,
Sure. I mean, you've clearly you've spent a lot of time and energy thinking about growing your personal wealth and diversifying your income streams. I'm curious, now that you have this sort of media company that you've created, you spend a lot of time speaking with folks who are becoming as fascinated with all of this as you are.
yeah.
Do you feel like there are specific aspects of this process that you find physicians need a little bit of help in? Or are there specific topics that you find yourself returning to over and over again, trying to help people understand how they can work towards getting some financial freedom?
The number one question I get from clients, so I would, from 2016 to about 2022, I was doing a lot of coaching, and the number one fear from clients was, who am I going to be if I'm not a doctor? And so that's the one skill that doctors really struggled with is, transitioning, doing a non-clinical career, because the one fear that they always share with me was, I went through medical school residency, but I don't treat patients. And they feel that treating patients is the only thing you can do as a doctor. And what I want to emphasize is that being a doctor is a skill set. So you've taken your exams, you've gone through medical school, you've gone through training, you have all these skills, and you can transfer them into different avenues. So if you want to be a real estate investor, or you want to be an angel investor, or you want to be a public speaker, a coach, an author, a consultant, you can do all these things. And so that was one of the biggest struggles that doctors have when transitioning, is who are they without treating patients. So, on this podcast, a lot of, I read this recent statistic for a lot of, Stanford graduates. They don't do residency. They do startups, and they work for Silicon Valley, and they start their own companies. So same thing from people from the top schools. They go into consulting or work for Deloitte and things like that. So that would be my answer to your question.
Sure. I mean, and you've done things like consult for medical technology companies as well, right? So you sort of maintain some of that identity as a medical professional while also leaning into your entrepreneurial spirit.
Yeah, I really love that because I also did a 6 year stint in healthcare consulting, working with insurance companies, working as a healthcare IT consultant. And it really helped me to look at things through the lens of physicians. So whether or not they're at the behind the computer screen and they need somebody to help them efficiently document or put in orders, do it very efficiently and effectively, or think about just things from an insurance perspective. And so it helped me to step back and use my clinical knowledge and my clinical training background experience and help translate that into helping others in different situations and scenarios. So a lot of that was in the patient care setting, but sometimes it's not. Sometimes it's like with EMR or EHR or medical coding and billing, these types of things.
I feel like, you're someone who achieved financial independence like at a pretty young age, like pretty early in your career.
Yeah.
And that's given you, the freedom to explore all of these opportunities beyond your conventional career. How do you think of the concept of freedom? Like what does it mean to you to actually be free from the sort of conventional constraints that most of us are working within?
Yeah, I really love that question. So I talk about freedom is broken down into four components. The first is obviously it's emotional freedom. So you're healthy, you have positive, healthy relationships. You can contribute to the society. You're on your path and your purpose. You're giving back. So that's emotional. The second is time freedom. So time freedom is, for example, you'd be able to spend Thanksgiving with your family or Christmas with your family or New Year's. You have these options. A lot of my doctor colleagues, they don't have that option because they have to be on call during that time, and so their families miss them, or they miss their kids' soccer games, or their daughters' weddings. These types of things. That can be, as doctors, you make a significant income, but if you don't have that time, you're not really free. So
Right. You either get Christmas or Thanksgiving, but you never get both, right?
yeah, exactly. So it's kind of
Yeah.
like, why work so hard when you can't spend it or share with people you love and, people that are, significant others. And the third is location freedom. So you may be making $1 million a year, but you're in a city you hate, like horrible weather. It's just very expensive and just, nothing to do. Whereas, you could take less of an income and live in San Francisco or places that you desire and you really truly. So that's location, and lastly is financial. So those types of freedom. And so if you can design a life around that, where you have a business or you have investment income or you have a job, and you're able to incorporate these four types of freedom, they may not all be optimal, but at least you have some semblance of control. And the number one predictor of happiness is certainty and control. So if you're certain and you're in control of, kind of where your life is headed, based on that, you're going to have a much higher quality of life.
Interesting. I wonder, along the same lines, how has your concept of this freedom shifted over time? Obviously what our goals are, and the things that drive us when we're 32 are different than the things that drive us when we're 42 or 52. How as you're moving forward through your life, are you thinking about freedom, as it might apply to something like wealth preservation rather than wealth accumulation, or legacy, or I don't know what your motivations are now, but how has that shifted?
Yeah, in my 20s to 30s, I was focused solely on financial freedom, basically earning as much income as I could from whatever source. And initially it was from my clinical income, but then as I started to really kind of see, it wasn't headed anywhere, I started to diversify and look into investment income and business income. So that was my 20s or 30s. 30s to 40s, I was focused on, building a life, getting married, settling down, having kids. So that was more of the time and location, emotional freedom, right? And then, my 40s and onwards, hopefully, I live long lives. You never know, but that's going to be giving back to society, donating to charity, giving back to my alma mater, saving for my kids, for my nephews and my nieces, sharing, wealth preservation. You mentioned legacy, estate planning, all these things, and thinking about how I want to shift more, just less of more of a visionary and more of a strategic thinker, as opposed to being in the trenches and doing things. Which brings me back to what I really, you mentioned about real estate. And, real estate is it's a wealth preservation and it's a great savings vehicle. If physicians want to use real estate as an income generator, it's usually through kind of like a commercial, or it could be through development or construction, things that really generate significant terms. But for the majority, real estate is great for wealth preservation and savings and tax advantages.
Right. Yeah. And we see that sort of the benefits of investing in real estate, whether it's directly or through a platform like ours, can really shift depending on where you are in your investing cycle and where you are in your journey. What you might focus on, whether it's actual cash flow or whether it's something more like long-term growth. That's certainly something we hear from investors a lot. I'm curious, you're, as someone who thinks so much about this stuff, I'm sure you're still reading the news each day and digesting all of the sort of, the future of finance and the future of technology, and trying to figure out how to position yourself for success there. So, of course, we're not allowed to give advice, but what's your hot take? What are your thoughts on investing in the landscape that exists today?
Oh, today, I think the investing landscape is so much different than it was 20 years ago, and so there's a lot more opportunities. So with a lot more opportunities comes a little bit more risk. Of course, you can do the tried and true, which is basically save 20% of your income, invest it into low cost index funds. You can do the real estate route, or you can start a business. Those things have always, for the most part, those are tried and true. If you're a high income earner, there's that strategy is pretty solid. There are other ways of investing that have higher returns and higher gains, but a lot significantly more risk. So, I just exercise caution, because as a physician or a lawyer, or a high income earner, you don't need to be taking that type of risk. All you need to do is, earn your income and preserve it, because, you have a lot of audience and listeners are, making, significant six figures. But, there's angel investing. I was an angel investor in Coinbase, Robinhood, and Reddit. And those, portion, there's venture capital. There's new asset class, Bitcoin, which is kind of emerging as a digital narrative to gold, and kind of a hedge against currency debasement and government instability. That's really, I was an early investor in that in 2012. But again, these things are a little bit more riskier, but they have potentially a higher return. And again, you don't need to be in these things, but just know that they exist. And but then again, you can lose a significant amount. So just be cautious. But I think AI is going to also be a really big area. It's going to change healthcare. It's going to change finances. It's going to change education. All these kind of like systems and institutions that need an upgrade. So AI is going to be good. And I think the whole technology sectors with autonomous vehicles is going to be really exciting.
Absolutely, yeah. It'll be fascinating to see where the future takes us.
Yeah.
I wonder sometimes. So, for folks who are listening to this, who are trying to sort of glean from your story some advice for how they can live their life or how they can start to make decisions. You point out that there are moments in your investing career where you're sort of in the right place at the right time, right? You're investing in real estate in 08, 09 after the great financial crisis. Awesome time to be getting into real estate, right?
Yeah.
Prior to that bull market, you're interested in options trading, great time to be, dipping your toes into that world.
Yeah.
You started a podcast in 2020 when all of a sudden everyone was excited about consuming more media and about personal finance. I'm wondering, some people will say, well, it's just luck. He just sort of, he got lucky. He caught the right waves.
Yeah.
But I'm wondering, how you respond to that sort of statement or that sort of mindset. If there's anything that can be extracted about your approach to life, absent whatever the specific timing is of any of these choices.
I recently finished this book about the science of luck. And it talks about kind of the people that were, quote, lucky. And it actually dissects what they did to be, quote, lucky. And coincidentally, just before I had a guest on my podcast, we were talking about creating your own luck. And it was a fascinating because I had a friend in college. He started a company and he took it public during the pandemic. And I was dissecting his success, and I was like, did he get lucky? Like right timing, everything, just because majority of startups, they over 99% fail, right? But he took his company public, and I was just dissecting. I was like looking at my success, and a lot of it is when preparation meets opportunity. So a lot of times when you hear about luck, for example, like the market bull run or the '08 crash or kind of the COVID, like these periods, and when you hear about these successes, a lot of the people that got lucky were preparing decades before. Either they were learning, they were tinkering, they were doing things. So that's one aspect, is where where preparation meets opportunity. I've also seen people that have done a lot of preparing it, and they get that opportunity and they miss it. Either they procrastinate, or they flounder, or they choke. Or you see this often in sports. So it's kind of like when you are prepared and your reticular activating system sees that opportunity, you have to execute. And so that's if you don't execute, you're not going to succeed despite all the work that you've done. So that's one thing. And the other thing is mindset, because I never consider myself lucky. I just always was looking at opportunities and how I could position myself to capture the upside, and always kind of, and I was always cognizant of minimizing the downside. So is that luck or is that a skill set? We can discuss networking, talking, just being open, friendly, agreeable, just giving value. These things open up more opportunities. So it's a combination of a lot of different skill sets, mindsets. I never think of things in terms of zero sum. I'm always thinking of everything is abundant, because money is energy. It's so, you get 10 times what you put out, and, we can all create our own wealth and all our own abundance. So, whereas some people see money as zero sum, it's like they lose $10, they give $10, they lose $10. So it's kind of this scarcity mindset type of thinking. So, it's really interesting because I always I look at some of the most successful Olympic athletes, and I'm like, did they get lucky, or is like, I'm always dissecting their success. So it's an interesting topic.
Yeah, it's fascinating. Fascinating. Yeah. This has been an incredible conversation. I really hope that we can have you back on the show sometime in the future, and we can talk about how things have evolved over time. You're a friend to Equity Multiple, and we appreciate you being here. So, Dr. Liu, thank you so much.
Yeah, thanks so much for having me, and congratulations on your podcast and keep up the great work, and congrats on your continued success.
Thanks so much. If you want to find more from Dr. Christopher Liu, you can find him at Financial Freedom for Physicians. He's got his own podcast, so you can hear lots more from him there. Thanks again.
Thanks, David.
That's it for this episode of Multiple Perspectives. Thanks again to Dr. Christopher Liu for joining me. If you'd like to learn more about Dr. Liu, you can find his podcast, blog, books, and much more at drchrislew.mdphd.com. If you want to learn more about commercial real estate investing with Equity Multiple, our podcast, blog, and white papers are always available at equitymultiple.com. You can find those links in the show notes along with a host of other resources. I'm David Lofgren. Thanks so much for listening. I'll be back in your feed real soon with another episode of Multiple Perspectives from Equity Multiple. In the meantime, let me know what you think about the new format. You can reach me at multipleperspectives@equitymultiple.com. Take care.